markets remain incredibly sideways, but today we're talking about the DXY, the euro, the pound, the dollar yen, and also gold. So we're going to run through these markets, even though, again, they are very sideways. So please keep that in mind when we're looking at these markets because really, as I've said in recent videos, there's really not a ton to do right now in these markets. So just be really careful out there when we run through these. All right, so looking at the DXY, if we look here at the price action going back all the way to 2023, we've talked about this in recent videos, but you can see where this over here, okay, we've got this diagonal down here, and this right here was that failed breakdown that we saw last year where we were getting bullish on the reclaim through here. Now, this level up here off of these highs is also very well defined, okay, so we have these highs up here, we had the breakout last year, and we had the retest as new support through here. So right now, as I've said in recent videos, guys, we've got a case where the DXY is trading above this area down here at 103 to 103.50. However, we did not quite see the DXY test that 103 level that I talked about last week. So instead, we got a bounce from the 103.40 area and the same thing here up around 105. So this is just a case of a sideways market. You know, unfortunately, I wish that we had better conditions right now. But following this, a very aggressive breakdown from the DXY, really since March 5th, it has just been a very sideways market. So again, you've got to keep this in mind. This is not, in my opinion, the time to be looking for big moves one way or the other, because we are just dealing with range-bound conditions. Now, with that said, and this becomes very clear when we take a look at the pound here in a minute, but looking at the DXY, guys, what really stands out to me is the fact that we did not see a retest down here of this level. Furthermore, we did not see a retest up here of this trend line that, again, we saw the breakout last year and the retest has new support. And this area comes in just below 105. Now, there's no guarantee that we see this up here or this down here. In other words, the DXY could just break out like this or it could just break down. However, again, right now we're dealing with a sideways market, and it's a sideways market until proven otherwise, right? You can't sit here and think that, okay, I know where this is going to go. Because nobody does, you know, you don't know, I don't know, nobody knows where this market's going to go. All we can do is play the levels, right? Level by level. So knowing that this area up here, okay, is going to be resistance, this is going to be support. Personally, I think if we see this tested up here, okay, if we see this high swept, 105 tested, then that right there could be a potential short for the US dollar. On the other hand, if we see these lows swept first, and the market comes down here and tests this level first, that could be at least a short-term long for the US dollar. The reason I say a short-term long, okay, a temporary long, is because if you look at the price action back here, this is really striking. In fact, let's take a look at the weekly. I think this is even better. I've talked about this before, but what you'll notice is that the price action through here, all right, the price action recently, these lower highs and lower lows, very similar to what we saw right back here in late 2022. And what you'll notice is that out of this consolidation, okay, these lower highs and lower lows, we got the market actually breaking down. Big weekly candle right here breaking down. Big weekly candle right here also breaking down out of that consolidation. So very similar situation to back here in 2022. Now, of course, there's no guarantee that happens again. But if we get similar price action, you can see that we had several months of, you know, a downtrending market here for the DXY. So that could potentially, you know, pan out again over the coming weeks. But here's the thing, guys, and this is what I will always say, is that as traders, our job is not to forecast where a market is going to go. Our job is not to forecast and say, here is where a market's going to go, or here is where it's likely to go. All we're doing here is playing the levels. All we're doing is playing the ranges right now. So this is a level by level market, meaning that, like I said before, as long as the DXY is between these two areas, then this right here is your range, right? 105 and 103. That's it. So we have this high up here, we have this low down here. Personally, like I said, I think these highs probably get swept over the coming days. So you're looking for, in my opinion, not financial advice, but in my opinion, you're looking for either shorts on the US dollar up here, or you're looking for longs down here in this area. Just keep in mind though, like I said, we are seeing similar price action to what we got back in 2022. And if that continues to play out, that could equal a move lower for the DXY, you know, breaking down below this area around 103 over the coming weeks. But again, we'll wait and see what happens. It's not my job to forecast this market or really any market for that matter. So let's take a look next at the EURUSD. And personally, I think that the weekly time frame really shows the best view of the euro. So you can see that back here, right, we have this trend line off of this low from back here in 2022. So what you'll notice is that we got a breakdown back here. So we had all these lows that built up, and we had a very aggressive breakdown through here. All right, so aggressive breakdown. We saw no retrace into this area, which is why, if you guys will remember, back here when the market was going sideways, we were talking about this imbalance back here around 1.07 and how that could come into play, which of course did come into play here on this candle. Now, at the moment, the market is very sideways. However, the reason I say this is the best view, in my opinion, of the EURUSD is simply because you can see where this level so far is serving as resistance on a weekly closing basis. So if we move this up to match up with these lows right back here, all right, so these lows right through here, you can see where the weekly chart has not broken out from this level yet. So that's why I'm saying that, in my opinion, this is the best view, because you've got this resistance area up here, and then also notice this low back here, right? This low, these lows through here, this is currently serving as support for the euro on a weekly closing basis. So that's significant because if you'll notice on the daily, and we talked about this last week, right? But if you notice on the daily, what we got last week was the euro closing below 1.0777. So this was the key level through here. We got the daily close below, daily close back above. Now, for those of you who know how I trade, this right here technically qualified as a failed breakdown, right? We got the daily close below. However, the very next day closed right back above. And what you'll notice is that over the last couple of days, this is what has served as new support once again. All right, so the issue here though, and this is the problem right now with these markets, is that if you are trying to long this right here, this little failed breakdown, right? The issue is that you've got this resistance area up here around 1.09, and you've also got these lows back here, right? And so that's kind of the issue right now with the EURUSD, is that it did make such an aggressive move back here that trying to long up here in this area following that kind of move is always going to be a little bit risky, especially when you have a multi-year resistance level just above that mark. So we'll see what happens here over the coming days, guys. But what I do think we could see here from this market, just like with the DXY, we saw the market, the DXY not quite test 103, not quite test 105. So I do think that some of these highs and lows could be open for a sweep. Now, what you'll notice is that this candle right back here, we never got a retrace into this candle. So this could come into play along with that trend line around 109 here over the coming days, in which case we could get a bit of a rotation lower back down here towards support, right? So again, sideways market until proven otherwise, guys. I think that's the big takeaway here with the EURUSD. So next up, let's take a look at the pound, which also, very similar. Once again, a very sideways market. And in fact, this is even more sideways than a lot of these markets. It really hasn't done much of anything for the past few weeks. And this right here, guys, so just so you know, this up here, okay, so you can see that we have this ascending channel off of these lows. And a lot of times I will look to play something like this right here as a failed breakout, where once we get the close below and the retest as new resistance, I'll look to short it. And the reason I didn't do that here is twofold. One, because we didn't get a retest back here during this channel when the market was inside this channel. So I was a little bit hesitant as to how significant the top of this channel really was. And furthermore, the main reason I did not short this, okay, is because you can see that the price action right back here was very sideways. Okay, so we got the break above this area around 1.28. And this break above, the market went sideways. We got a little bit of a step up here, and then the market went sideways again. So just a lot of sideways action here, to where if I were trying to short through here on that failed break, right, then the issue there is that I'm shorting into all of these lows back here. So I'm shorting into these lows, I'm shorting into these lows. And the other issue, this is kind of a third issue, is that the risk reward really wouldn't be that great, right? If you are trying to short this right here, right, this close back below, making this a failed breakout, and you're trying to short through here, your stop has to go above this high. I mean, there's no other way. And even then, you'll notice that we've got these highs right back here, right? So putting a stop up there is not a great idea because you've got those highs around 130.50. So there were a lot of reasons, guys. I didn't want to short this, but the risk reward, I mean, even if your stop went up here, you're getting in through here somewhere and your target's down here, that risk reward is not good enough. I need at least a 3-to-1 reward to risk to justify a trade. So with all that said, I wanted to give a little bit of a backstory, if you will, on why I did not take this as a failed breakout. All right, so looking at the pound, what I think we could see from this market, and this is really kind of telling in terms of the conditions that we're in right now. You can see that we've got this low right back here. We've got this high. And we've also got these highs up there around 130.50. Okay, so resistance up here, support down here. Now, what you'll notice is that since we got the close above here on, I believe this was March 5th. All right, so let's take a look here. This is, so March 5th. Okay, this close right here. What you'll notice is that we haven't gotten a retest of either of these levels. And this kind of indicates to me, first of all, indecision, right? I mean, that's first and foremost. We didn't see a move up here toward this level. We haven't seen a move down here toward this level. And at the same time, it also tells me that there's liquidity building above these highs up here, and there's liquidity building below these lows. Even this low over here, guys, this low was technically higher than this one, meaning that any liquidity that built up, okay, and this is very important, any liquidity that built up below these lows back here is still there, okay? This low did not take out this low. So we have not seen a sweep to either this side down here or this side up here. And so you kind of see where I'm going with this, right? I think that over the coming days, the odds of a sweep down here and a move back within the range, or a sweep up here and a move back within the range is pretty likely, right? Now, that may seem like a silly thing to say until you understand that I'm not saying that this could either go down or up, right? That's not the point here. The point here is that if we get the move down here first, we probably get the bounce. If we get the move up here first, we probably get the sell-off back within the range, right? And that's just a simple matter of liquidity. Again, we've got liquidity up here, we've got liquidity down here, and markets seek liquidity, okay? So that's the point here, is that wherever this market goes first, in my opinion, we're probably going to get a move back there within the range following that retest. Now, given today's candle, it does kind of look like we could get the move down here to sweep these lows first, but we're going to have to wait and see, guys. I mean, all in all, it's still a very sideways market. I know a lot of people are going to look at this and say rounded top, head and shoulders, whatever it might be. In my opinion, though, guys, it is just a sideways market and just very, very indecisive. All right, so next up, guys, let's take a look at the dollar yen. And I'll be honest with you, I really struggled to come up with a fourth market to look at. I know everybody wants to talk about gold, so that was an easy fifth market. The dollar yen, though, I was kind of on the fence about this because even though the technicals here are pretty good, it is still just a sideways market and really not a ton to do, okay? But I did want to talk about it, though, just because this is kind of a perfect example of what I look for in a market to trade it. And you can see that we've got the low right back here. So again, daily time frame, as they always are, you can see that this area served as support through here, and we got the close below. Okay, now this right here ended up becoming a failed breakdown because you can see we got the close back above and the retest as new support through here. All right, so this is exactly what I look for, though, in a market, because what this indicates is that the market was not able to push lower below this low. Now, furthermore, we also know that liquidity had built up below these lows, right? And that's why the market swept it. But this reclaim right through here, okay, so reclaim through here, retest as new support, that's exactly what I look for in a market. Now, I did not trade this simply because of the conditions here over the past few weeks. I did not like the idea of looking for trades with the market just so sideways, all right? But this through here, though, reclaim through here, you've got the retest as new support, and you can see that this area up here, this resistance level right around 151.24, this, obviously came into play as resistance here over the last few days. So going forward, guys, you can also see that, today, once again, this level back here around 148.64, once again served as support here on today's candle. Now, what you'll notice is that, we kind of have conflicting signals here from the dollar yen. And this is no surprise just because this is what we've seen across the board from a lot of these markets. But you can see that we've got this bearish engulfing candle right back here, and then we've got this bullish pin bar. Now, the key to this, okay, is that this bearish engulfing candle, this is where a lot of traders go wrong because they see a candle like this and they automatically think that it is a bearish signal. And that can be the case. However, the issue there is that you really want to see follow through over the next 1 to 2 days. So in other words, if we don't see the market start to close down here in this area, then this right here doesn't really matter all that much. If the dollar yen starts closing back up here, then that's actually a bullish signal, right? Because it shows that there was a lack of follow through to the downside. So if this does play out to the upside, like let's say we get some dollar strength here over the coming days, and we do get the breakout, right? This could also technically be an inverse head and shoulders shaping up. But again, like I mentioned with the pound, this is the issue here. We have the DXY trading between 103 and 105. We also have the DXY trading aggressively lower in March. So you can kind of see the issue here that if you're playing this as an inverse head and shoulders, right? And looking for, a breakout like this, even though it could come, you've got to understand where the DXY is in relation to those key areas, right? So I'm not saying that this up here can't happen, but you've also got to understand the markets that we're in right now don't necessarily justify looking for, hundreds of pips, within days or even a week or two. Now that could change. It's going to change. Markets are going to come back. We're going to get some trending markets again. So I think with that in mind, if we do see the DXY taking out levels like this up here, the dollar yen taking out levels like this up here, closing up here in this area, then that could open up levels like 154.80. Okay, so, that could come into play, but again, it's going to take a daily close above this area to really break out and expose higher levels. But I wanted to show this just because of the clean levels here on the daily time frame and also this failed breakdown that we saw here in March. All right, so last but not least, guys, let's take a look here at the at gold. Okay, so XAUUSD. We've got this channel here on the daily time frame that goes all the way back to the start of 2024. So we've talked about this a lot. In fact, back here when gold was trading through this area, I mentioned that I didn't think this was a topping pattern simply because we did not see gold test the top of this channel yet. And we saw it back here. We saw a bit of a retracement, not much, down here into 3K. And now we're getting that breakout above the top of this channel. Now, for obvious reasons, this is a significant development because this right here is the first time we're seeing a break of this channel since it started back here in 2024, okay? Now, the issue here, okay, and I know this is going to come across, maybe a couple different ways. Maybe you are looking for a pullback on gold, but I think a lot of people right now are going to hear this and think that I'm a little bit crazy, but that's okay. You can see here gold is trading above this. You can also see that it's serving as new support right here. And what I'm going to say, guys, is that upward breaks of ascending levels like this tend to fail, okay? Now, it doesn't mean it's going to immediately fail. It doesn't mean that this right here is a short. I want to be very clear about that. This could take days or even weeks to fail. But more often than not, what you get is the market, breaking out up here. And again, it could take days. It could take weeks. We could see the market come all the way up here, right? But eventually you get the market pulling back and then closing back below this to target some of these areas. Now, the issue with this, obviously, and I'm not a fundamental trader, guys, but at the same time, I can't ignore what's happening out there. Fundamentally, gold is very bullish, no doubt about that, right? But technically, when I look at this and I see this level up here and I see areas like, this pocket down here, I do think that if gold were to fail here and close back below areas like this through here, all right, so if we take a look at where this comes in, so right around 30.80, if we were to see gold fail here and close back below this over the coming days, then I do think that opens up downside targets. And the reason I'm talking about downside targets is because personally, I would much rather look for shorts here if we get it. I want to be very clear. If we get it, I am not shorting gold right now. I would much rather look for shorts here because the upside, you're looking at big round numbers because there's nothing up here. There's nothing up here to serve as a target, right? Gold has never been up here before. So, you can look at, sure, 3,100, 3,200, 3,300, etc. But as far as a play here, I can't really trade that. But what I could do, if we were to get it, I could look for a short, on a sustained break back below here. Okay, if we were to get something like this, especially below 30.57, this high back here, if we were to get something like that, then this up here becomes a failed breakout. And then we're looking at a move down toward 3K and probably down there toward 29.40. So again, we'll see if it comes, guys. We'll see if it happens. If it doesn't and gold continues higher, then I do nothing here. If we get it though, and we do get that sustained break back below areas like 30.57, then you better believe I'm looking for shorts down here to fill in imbalances like this. All right, so that's it for today's video, guys. I hope it helped. Again, just keep in mind that the market is very, very sideways across the board, not even just Forex, but really the stock market and crypto. Everything is very sideways. So just, remain patient, wait for your trade setups to come, never chase the market.